report, the 30th of October 2024. Right, so what's in store for us today? Political uncertainty in Japan and its impact on the yen. This is a topic I'd like to discuss about today. First, an introduction. What is it all about? The recent political developments in Japan following the weekend election have generated uncertainty, weakening the yen and influencing both domestic and global markets. The ruling Liberal Democratic Party lost its governing majority for the first time since 2009, marking a turning point that's introduced economic and policy changes so far. So the election results and political implications: LDP loses majority. While it's still receiving the most votes, suffered a significant loss of 56 seats, leaving the coalition 18 seats short of the 233 needed for a majority. Now, with that, it comes with the problem where the Prime Minister's uncertain future. Prime Minister Ishiba has indicated his intent to remain in office. As given from his statement, he didn't resign and form a new administration despite the coalition's poor electoral performance. However, the political landscape remains unstable. Even though he didn't resign, that can happen anytime, because with a leadership vote scheduled within the next 30 days, anything could happen. Even if Ishiba survives the vote, the durability of his administration is in question. Now, that is the possibility right now. We will have a potential coalition alliances to regain, because to regain political stability, the LDP may seek alliances with smaller parties. Two potential partners are the Democratic Party for the People, who won 28 seats. Its leader, Yuichiro Tamaki, has expressed openness to collaborating with LDP on specific issues. On the other hand, there's also the Japan Innovation Party, secured 38 seats and could be another coalition partner. But at the current moment, the DPP seems to be the leading partner. Now, what does this impact, the governance like? Now, the lack of majority and ongoing coalition negotiations will create policy uncertainty. You can't run away from that, impacting both political stability and investors' confidence in Japan. Now, you know the background, the potential, the alliances and the uncertainty and stuff like that. So at the end of the day, how does it impact the financial markets? That's the most important thing that we want to talk about. Now, first thing first, we will definitely have a weaker yen. You have seen that, and the stronger stock market. When I talk about the stock market, we're referring to the Japanese stock market here, yeah? The yen weakened by 0.65%, trading at 153.28 per dollar following the election results. Investors perceive the ongoing political uncertainty as a factor that limits policy clarity, causing them to move away from the yen. Meanwhile, the weaker yen has benefited Japanese stocks, with Nikkei 225 index rising by 1.79, leading gains across Asian markets. Not only that, we can have the carry trade resurgence. A weaker yen could reignite interest in carry trade, where investors borrow in low interest currencies such as the yen to invest in higher yield assets elsewhere. Now, this strategy amplifies currency volatility and affects global financial flows, raising concerns about Japan's impact on global market. Not only that, we also have a shift in market sentiment, whereby investors believe political instability will prevent the Bank of Japan from implementing restrictive monetary policies. The BOJ's ability to respond to rising inflation, which has unsettled Japanese voters unfamiliar with higher prices, could be compromised by political challenges. So all this will take time, and it translates to a weaker yen for now. So if you are talking about trading the dollar yen, it's pretty clear that from now onwards, any dips in the dollar yen is being bought up. And you can see since the election results, the dollar yen has been rising all the while. Okay, the dollar versus the yen. Now, not only that, we also want to talk about the economic implications of the political crisis. Now, Bank of Japan's policy constraints, here the LDP's electoral difficulties are partially attributed to dissatisfaction with rising prices, an unfamiliar phenomenon for many Japanese citizens. Although the BOJ raised interest rates in July, it now faces limitations in tightening policy further due to political uncertainty. Possibly, this could lead to more accommodative monetary policies right over here. Now, this here could also further weaken the yen, okay? Now, a weaker yen could have ripple effects globally. It might encourage a return to loose monetary conditions, benefiting investors worldwide. But also next part we have to deal with is the risk of currency volatility. And it could also discourage foreign investments given that Japan plays a critical role in the global financial system right over here. So while a weaker yen initially boosts stock prices, the currency's sharp volatility reminiscent of early August carry trade unwinding signals that instability in Japan can disrupt financial markets, both locally and globally. So right now, until they set a government, right, probably nothing is expected. But once a government is in place, we need to see the policies from there onwards. But until then, for the next 30 days, where they are haggling, to form that government, things will stay status quo. But right after that 30-day mark, or as soon as and then the prime minister is being confirmed, then we need to revisit this thing once again. Okay. So at the end of the day, conclusion, definitely political uncertainty is likely to keep the yen weak in the short term or medium term. However, if a new coalition forms quickly and restores stability, the yen may strengthen, leading to downside risk. Okay, so until then, we know the direction of the dollar yen. Now, as for the carry trade resurgence, traders could borrow yen at low rates and invest in high-yielding assets elsewhere, and creating downwards pressure on the yen, especially if the Federal Reserve maintains a hawkish stance. Okay. As for the Nikkei 225 rally, a rising stock market in Japan typically coincides with a weaker yen, as foreign investors sell yen to buy Japanese stocks. Investors sell yen to reduce exposure to further depreciation risk. As yen weakness boosts stocks prices, fund shifts from currency to equity investments. Okay, so that's the reason why they're selling yen to go for equity investments. Now, intervention of Bank of Japan in case of excessive yen weakness, Bank of Japan could intervene, causing a rapid reversal in the dollar yen. This also could happen, but so we need to see. But I think for now, the status quo will remain until a new coalition is being formed. Okay, so with that, that's the report for today.